$18,136. That's how much I invested between $20 to $100 every single day the market is open since January. It's been a wild ride and it wasn't easy, especially during the months like last April where the market dipped. But here's the thing, I learned some surprising lesson. Is daily investing better than lump sum investing? Should you be doing the same? Hi, my name is Ron and welcome to Pinoy Stock Investor. Before we dive into the numbers and results, I want to know how much have you invested this year? Are you sticking to a monthly plan or are you investing whenever you feel like it? Let me know down in the comments. We hear it all the time, investing is the key to building wealth. But let's be real, investing thousands upfront isn't just an option for many of us. That's where dollar cost averaging or DCA comes in. By investing small, consistent amounts over time, DCA reduces the stress of trying to time the market perfectly. It also smooths out the market highs and lows and make investing accessible even for beginners. Think about it. How often have you worried about if now is the right time to invest? Maybe the market feels too high or you're afraid of losing money if it crashes. I've been there too. That's why I decided to test this strategy for myself. Over the past year, I've invested $100 every single day the market is open. No skipping days and no emotional second guessing. My portfolio consists of the biggest names like Apple, Microsoft, and Google, and I also have ETFs like SCHD. In this video, I'll take you behind the scene of my year-long journey. We'll break down the data and answer one big question. Is dollar cost averaging really worth it? Trust me. The results were eye-opening. So what did I do? I've committed investing $100 every single day into a portfolio of dividend-paying companies, growth stocks, and ETFs. My goal is simple: consistency over perfection. Every morning I'd wake up, open Fidelity, add funds, and invest. Rain or shine, good market days or bad, I didn't let the market close without investing that $100. In total, I've invested $18,136 throughout the year. That sounds a lot, yes, I know, but breaking it down daily made it manageable and it kept me disciplined. By December, my portfolio grew from $64,000 to $101,000. That's about 55% increase, and it came from market returns, dividends, and of course, my daily contribution. Let's break it down month by month. January started strong with $800 deposits, setting the tone for the year. In February, I saw 2.4% return, adding $1,588 to my portfolio. This is really exciting because it felt like the strategy is paying off. March was a standout. With $1,200 in deposit and $900 in return, my portfolio is gaining momentum. And this is really important because by the end of March, I am nearing $73,000. But then April came, the market stumbled, and my portfolio is down by negative 3.77%. That's about $2,739 in value. I'll admit that drop is really nerve-wracking and it wasn't easy. I'm pretty sure you probably got scared too. But here's where dollar cost averaging works its magic. I kept investing through the dip, buying more shares at lower prices. By month's end, my portfolio recovered to $71,000 thanks to the new investment of $3,166. Fast forward to May, the market bounced back with 4.67% return, adding $3,300 to my portfolio. By this point, I was over $76,000 and I'm feeling happy and confident in the process. Now let's skip ahead to November, the best performing month of the year. A 5.59% return added over $5,100 to my portfolio, pushing it past to $95,000. But it wasn't smooth sailing at all. Last October, the market took another hit. Even though the losses is not as bad as April, it's still tough to see red in my portfolio. Still, I stayed consistent and used the dip as an opportunity to buy more shares, lowering my cost basis and boosting my future returns. These challenging months taught me a powerful lesson. Consistency pays off. Instead of panicking, I trusted the process by continuing to invest during the market dips. I positioned myself for bigger gains when the market rebounded. For example, the shares that I bought last April and October are some of my highest performers, thanks to their lower cost basis and higher yield on cost. This wouldn't have been possible if I stopped investing when things got tough. Let's break down the result of this year-long experiment. Out of 36,000 increase in my portfolio, $18,136 came directly from my daily investment. But here's the exciting part. The remaining $17,891 came from market returns, dividends, and interests. To me, this shows something powerful. The market rewarded my consistency. It's incredible to see how compound growth matched the effort that I put in. Now, I'll be honest, this return wasn't just from what I invested this year. It's also from the result of the discipline that I maintained in the previous years. And I couldn't be more happier with how it all came together. But here's what it taught me about long-term investment. Consistency is everything. By investing daily, I didn't have to worry about timing the market. I avoided the stress of obsessing over the market's highs and lows, and I just trusted the process. Volatility isn't the enemy. It's an opportunity. April's market dip is really tough to watch, but it allowed me to buy shares at a discount. And when the market rebounded, those shares became some of my biggest contributors to growth. Dividends are magical. Every time I reinvest these dividends, I was adding more fuel to the fire of compounding. Over time, those small reinvestment snowballed into meaningful growth. Now let me ask you, what's your experience with volatility? Do you see them as a challenge or an opportunity? And how do you handle your dividends? Drop them in the comments down below so everybody can learn from each other's experience. Looking back, this year reinforced the power of patience and consistency. Every day's investment may seem small, but together they added up to something incredible. And the best part, this growth is just the beginning. By staying consistent, reinvesting my dividends, and sticking to my plan, I know that this portfolio will continue to grow, no matter what the market throws my way. Dollar cost averaging completely transformed how I approach investing. By removing the stress of timing the market, it allowed me to focus on what truly matters, which is consistency. Even with the market's ups and downs, this strategy helped me grow my portfolio from daily $100 investment into six-figure achievement. It's a proof that small, consistent steps really do lead to incredible results over time. But this isn't just about reaching a number. This is about building a habit that sets you up for financial freedom one day at a time. What about you? Are you ready to take those small daily steps? I'd love to hear your thoughts, so make sure to drop them in the comments. If you get value in this video and you enjoyed it, don't forget to subscribe and like this video. And if you're curious what stocks am I holding on my portfolio, feel free to watch this one. Have a great day and peace.